What do you think of when you hear the word tax? Do you feel hungry, confused, or indifferent? Do you wonder why you have to pay taxes and where your money goes? If you do, well, you are not alone. A lot of people also have a negative perception of taxation, and that usually leads to a low level of tax compliance. But taxation is not a curse. In this episode, we will explore the foundation of the Nigerian tax system, its historical roots, and the primary purpose of taxation. So buckle up and join us on this journey through the economic heartbeat of Nigeria. Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of taxmobile.online. Don't forget to subscribe and hit the bell icon to get notified when we upload new content. Let us start by defining what taxation is. Taxation is the imposition of compulsory levies on individuals or entities by governments of a country. The governments of countries require individuals and entities within the country's border to fulfill certain financial obligations, with the primary goal of raising revenue for government expenditures. The collection of taxes allows government to meet their financial needs and fulfill their responsibilities to the citizens. This revenue is crucial for maintaining public order, building infrastructure, providing education and healthcare, and supporting other functions necessary for the overall well-being of society. Although the primary purpose of taxation is revenue generation, it also serves additional purposes. Government can also use tax policies strategically to influence economic behavior and achieve specific social objectives. For instance, tax incentive may be introduced to encourage investments in certain industries, promote environmentally friendly practices, or stimulate research and development. Taxation is a tool for addressing issues of income inequality. The concept of progressive tax system, where individuals with higher incomes pay a larger percentage of their earnings in taxes, are designed to promote a fair distribution of the tax burden and contribution to social justice. Taxation also plays a role in macroeconomic management. Government may adjust tax rates and policies to influence spending patterns, investment decisions, and overall economic activity. This can be particularly important during times of economic downturns or inflationary pressure. In summary, the primary goal of taxation in Nigeria and other nations is revenue generation. However, it also serves as a versatile tool for shaping economic behavior, promoting fairness, and contributing to broader societal and economic goals. Now, let us move to the historical context of Nigerian tax system. This can be divided into two eras, the pre-colonial era and the colonial era. In the pre-colonial era of Nigeria, various ethnic groups developed indigenous and unique systems of revenue generation tailored to the needs of their communities. These systems were characterized by decentralization and were deeply rooted in traditional practices that reflected the socio-economic structures of the time. Agriculture played a pivotal role as a significant source of revenue in many pre-colonial Nigerian communities. Taxes were imposed on various agricultural activities such as cultivation of crops, livestock farming, and the extraction of other natural resources. These levies were crucial for sustaining local governance, supporting communal needs, and maintaining societal order. The way the taxes were collected also showcased the decentralized governance of the era. It was typically organized at the local or regional level rather than a bureaucratic affair. In this era, tribute systems were also widespread. In regions where one community conquered another, the conquered territories or communities were required to pay tributes to the dominant ruling authority. These tributes took various forms. It would be goods, services, or even labor, and the purpose of this tribute system was twofold. Firstly, tribute system serves as a means of resource redistribution, as the conquered communities contribute a portion of their produce, labor, or other resources to the ruling authority. Secondly, tribute system played a role in the consolidation of power. Extracting tributes from conquered territories is a way the ruling authority asserts and maintains its dominance. Now to the colonial era. During the colonial era, Nigeria underwent a significant transformation under the influence of European powers. One key element of the colonial administration strategy was the introduction of formal tax systems. The colonial powers introduced new and unfamiliar tax systems. These include land taxes and poll taxes as part of their overall revenue collection strategy. Land taxes in particular were implemented to generate revenue from the extensive agricultural lands in Nigeria. The formalization of tax system was accompanied by the establishment of administrative structure designed to facilitate tax collection. This shift represented a move from the traditional decentralized system to a more centralized and bureaucratic approach, aligned with the administrative structures of the colonial powers. However, the changes in tax policies during the colonial era were not solely about revenue generation. Instead, they were strategically tailored to serve the economic interests of the colonial powers. The primary goal was the extraction of resources for the benefit of the colonizers, and this includes both human and natural resources. Land taxes, for example, often favored large-scale landowners, including European settlers, and favored the interests of the colonial elite. Also, poll taxes imposed on individuals, regardless of their economic status, created discontent and resistance among the local population. Furthermore, the colonial administration introduced export duties and other trade-related taxes to capitalize on Nigeria's economic resources. However, these policies were often designed to benefit the colonial powers, redirecting wealth away from the local population and reinforcing the economic exploitation inherent in colonial rule. In summary, the changes in tax policies during the colonial era was instrumental in consolidating control, generating revenue, and facilitating the exploitation of Nigerian resources. These policies, often favoring the interests of the colonial powers, contributed to economic imbalances and played a role in shaping the socio-economic landscape of the region during the colonial period. Now that we have explored the foundation of Nigerian tax system and a brief historical context of Nigerian tax system, in the next video we will be exploring the legal framework of taxation in Nigeria. If you have any questions about the Nigerian tax system, ask in the comment section below and we will try to answer them in our subsequent videos. Also, don't forget to subscribe and hit the bell icon to get notified when we upload new content. Thank you and do have a wonderful day.